Welcome back to the Fast Money Halftime Report. Let's get some unusual activity here. Pete is watching a office supply company ahead of earnings.
Yeah, and take a look at Staples today, and you'll be able to see the option activity that's going on in this name. Actually got earnings later on in the week, but you take a look at the March 22 calls. This stock's trading below that level, closer towards $21. 22 calls, suddenly a 9,000 block goes up, followed by multiple other size blocks, but over 11,000 of these contracts have traded today. Expectations maybe to see Staples break back up towards that upside. It's resting right now on the 200-day moving average.
And Staples is really has a big e-tail component to it. Zach, you've been long this name.
Yeah, I'm also long because, first of all, Office Depot has really struggled, and you know, they provide a staple that people need for work. They may be using one staple.
God, I love Zach.
I do like this company.
All right,
separate from the pun.
let's move on. Let's get to our call of the day here. UBS downgrading Amazon to neutral from a buy, reducing its full-year EPS estimate, sees increasing pressure to margins as the company rolls out its new streaming service to compete with Netflix. Now, we've heard these reasons before, and this is part of the bearish case on Netflix, that content costs will increase. It'll cost more money to buy content, more money to create some distribution agreements with some of the hardware providers like game console makers as well as TV makers. We are seeing Netflix trade lower as well. And take a look at Coinstar. That's also lower on the day here. Is a bloom off the rose, BK, when it comes to this space?
Yeah, I think it is. I mean, I still think it's a great space, and certainly this is the way that the entertainment industry is going. But in the meantime, you now have 3, possibly 4 competitors coming in here, and margins are going to be squeezed. It's just the way things work. That's competition.
Pete, I'm curious because UBS still says that it is a premier, Amazon that is, a premier online commerce network.
Absolutely. I mean, when you look at the valuations, yes, it gets very difficult. Even the forward valuation is somewhere very close to about a 40 times. So obviously there's concerns there. But when you look at the growth and the commanding presence that they've got in e-commerce, you can understand. I'd love to see it pull back even more, because then I think you'd finally get an opportunity. We're already a few dollars off of those highs. I'd like to see it a little bit further, but I think you start getting towards those moving averages, that's when you'd have an opportunity.
Okay, let's move on here. Our next guest is known for his bearish market calls, and he's been very vocal in calling for a market correction. Marc Faber of the Gloom, Boom, and Doom Report joins us now in a Fast exclusive on the Fast Line with where he would actually be putting money to work. Marc, it is a pleasure to have you with us.
It's a great pleasure. Thank you.
In one of your recent notes, you said that you're concerned about emerging markets' failure to make new highs, that that's a trouble sign for stocks. At the same time, we're seeing crude reach new highs here, $100 and up. Where do you see the market rally right now?
Well, I think that from here onwards, stocks will move very selectively. I happen to like energy because if the economy surprises on the upside, demand will pick up. In actual fact, the demand in developed countries has picked up, and in emerging economies it continues to go up. So I think in a, let's say, Goldilocks outlook, you would have to own some oil. And if you're very bearish about the world, it's a nightmare scenario in the Middle East. And I don't think that Saudi Arabia can offset the production shortfalls of Libya. And Saudi Arabia itself is very vulnerable. And so I would say under any scenario, I would own some oil and energy shares.
In terms of the energy shares,
they have rallied a lot,
sure,
and they are overdue for a correction.
In terms of the energy shares, Marc, what sorts of energy companies would attract you?
Well, I mean, I recommended Chesapeake Energy when it was around 22, 23, because I happen to like natural gas. And I don't think the natural gas ETFs are attractive. So I like Chesapeake, but at this level, I think it may also be due for a correction.
So basically you're saying that stocks will move selectively. You like energy, but energy is overvalued right now. So if you had to put...
I'm not saying overvalued.
Okay.
I'm saying it's overbought near term.
Okay.
Like the U.S. stock market, by the way.
Okay. Thanks for that clarification. In terms of housing, you have an interesting call that you think the downside is limited. Yes, there could be a further correction, but the downside is, in fact, limited. Are you actually allocating capital to the housing market?
Well, I think some of the housing companies, the stronger one, like KB Homes, are reasonable. I think they will also correct, because I think that the whole inflation trade that has become overly popular is going to correct. That started the correction beginning in November with emerging economies. Stock markets, they are down, and many stocks in emerging economies are down between 40% and 20%. And so I think this correction will be ongoing. But in general, my argument is that if people in the U.S. have money, rather than to play the stock market and the bond market, which is rigged by the Federal Reserve and other institutions, if you can find a house you really like, and a house you really like shouldn't be a house where you think it will go up in value, but the one that you like, then I would buy a house. I think the price is now quite right.
Okay, Mark, we have to leave it there. We appreciate your time. Hope to see you and hear from you again. Marc Faber of the Doom Boom and Gloom Report.